Welcome SMF Street Traders. SMF. What does it stand for? StockMarketFunding.com. What we're going to address today, and it's a Friday, and today's date is 8/27 of 2010, and the time is 10:59 a.m. Pacific Standard Time. And basically, what we're going to show you is the instrument right here. You can see it's an iShares Trust Barclays 20-year Treasury. And it was getting very toppy. It came up here. It hit resistance. The crowded trade is up right up there. And it's right over here where we had that big major reversal back in '09. And it went straight down. One of the things that we're going to show here is we have a series of trades that we'll be doing with this TLT. And they're the options market. And I've got September put options here that the SMF Street traders will go over with me on their Saturday training, which will be tomorrow morning. And we're starting to take a look at both the September expiration and the October one. The reason why SMF Street traders is because we are going to use this as a volatility trade. So when we first previewed the TLT, everybody wanted to buy the treasuries, as we know. And we had this big, long, multi-week breakout and a very bullish weekly chart breakout. We started to break out over here on 4/4 at $87.50, and we just topped out. Today's high was yesterday's closing was 108.42. Today's high, which is Friday, 8/27 of 2010's high, is 108.33. And basically, when this pulls back, SMF Street traders, that's why when it gets, where we get at that reversal point, that's where we want to buy them put options. And here they are. Here's the 105 put for September. It's up right here. It's up 73%. Yes, how nice that is. And the 106 is up 74%. How nice that is. Not only that, the 107, which is now in the money for September, plus 63%. Whereas the call side of the market, you lost 58%. So we're going to look at buying the bottom first again, because we've already done a series of trades using the TLT. And basically, it's getting net adjusted at each market price level on each side of the markets with calls and puts, naturally so. The 110, which was up out of the money, they took out 66%. Okay, and the right at about where we're at now in the strike price, if you take a look at the 105 put, it's up, and that's an October one, it's up 29%. So the inline month, which is the September, you can see where you get the greater premium for an intraday trade. So on intraday trades, you can do the September. If you're more into building the trade, well then let's use the October ones, because it gives us time to diversify our entries on both sides of the market, and one of the sides are going to pay us big. So we want to get net adjusted wholesale on today's entry. We have various different scenarios where we start buying where they took out all the premium. This is the side, SMF Street traders, that we buy. And that would be the first side of the trade you get into. The other part of it is, this is already intraday made its big move. They need to come down. Okay, so if this breaks higher intraday, the puts will keep going down. But if this sells off intraday, well, naturally your calls are going to go down in value. And you can't buy both sides every day. You can't buy both sides wholesale. Sometimes you can, it might take you a couple days. You get the wholesale side. Then after you get that side, then you can start getting the other side, as you've been showing. So the name has got a reversal. All right, 108.42. But check it out, 108.33 was the high of the day. So basically, we've almost, if once we go from 108.33, we're going to see how we hold that low. And if we break between that low, then that means that the up and out of the money volatility calls will go lower in price and get more wholesale. And so therefore, we'll do our entries accordingly, trading the overbought and the oversold and using the risk volatility trades that you have been trained to do, SMF Street Trader. So have this on your list for new entries. Okay?